That actually is, I think, one of the most critical things an investor can do is the ability to identify the key variables and then figure out whether or not you can gain an edge in understanding those variables. So that's actually one of the first things I do in my checklist is when I'm doing a very cursory look initially, I try to understand A, why is this being sold? B, what are the key variables that are going to make this a success or a failure? And then C, do I have the resources to understand those variables? Because frankly, I have areas that are of competence and I have areas that I'm weaker in. And I have certain capabilities as a firm that are strong, and certain capabilities that cannot compete with some of the bigger investment funds out there with huge research budgets, massive staffs. So it's identifying those key variables, understanding, is this somewhere where I can gain an edge, and is this something where I can understand? So if I'm looking at, say, an oil and gas producer, for example, the key variable may well be, what is the oil price going to be in 12 months? That is not something I'm ever going to have an edge in. So very early on, I will not spend time on that company. I will just let that go. But if looking at a company is, the key variable is, they're under earning due to this bad performing division, that may be something where I can get an edge in. And so it starts off early trying to identify what those variables are and is it somewhere that I can add value. And then it comes down to focusing on those key variables. I mean, I see so many analysts who spend time talking to management trying to figure out whether the tax rate is going to be 39 or 40% next year. At the end of the day, that's not going to matter too much whether or not this investment is going to be a success. However, if a turnaround happens and the margins go from 6% to 12%, is the critical question, and you shouldn't waste any time discussing that little tax rate question. What you really should focus on understanding is why are the margins low now, and what are going to be the drivers to get it from 6 to 12 in this example, and how can you go about judging that? And so I find that people spend all this time building these beautiful DCFs based on so they have to find every little assumption, but they don't spend nearly enough time on the one assumption that's going to matter. And so focusing on those key drivers is really, I think, the core of any good investment process.